the second day where HDFC Bank stocks are taking a knock. You're seeing about a 2% dip in the domestic markets after the stocks had already dipped about 8.2 odd percent, 8.4% on Wednesday. Now, what we are picking up from some of our sources is that there was a concern on market expectations, and that has not been managed adequately. I have with me Muralidhar, Swaminathan, our managing editor. Sir, what do you think the bank missed out on? What are your sources telling you about?
Okay, so I picked up the phone in the morning and I called them. Like the good old days, I scribbled my notes on the notepad. Let me just have a look to refresh my memory from what this source exactly told me. And they are very well placed sources close to the industry. They know everything that's happening. Their main point that was told to me is that the communication from the management has not been effective.
Okay.
It was not adequate enough to manage the expectations. So, two parts to this. One is it should have been a continuous communication,
Right.
and the guidance should have been there for the investors. Now, what happened with the investors was that for a long time they assumed that everything will be managed beautifully, there won't be a problem. 25-30% is the kind of expectation
Right.
from HDFC Bank that you
Right.
know very well, you track
Right.
it very closely. But the problem here is that the uh, turn of events is something that has changed the picture
Right.
post merger.
Right.
So the merger itself would have, it's a process. That process would have had its own pace, which you know better.
Yeah.
But that is something turned after the rate cycle change, which means that interest rates have been going up for a very almost 1.5 years now,
Yeah.
and cost of funds have gone up, and therefore raising deposits, which is the key raw material for a bank. Raising deposits is the most important raw material for a bank when it comes to lending. If you don't get deposits, you cannot lend. They're an intermediary. That's the key takeaway. Now, even in the analyst call, if you see, there is no clarity. The focus is on margins.
Yeah. Yeah.
Margins are a function of the cost of funds and the cost at which you are going to lend. So that has got disrupted.
Right.
Now, what my sources told me is that, look, that is a transition kind of a problem.
Right. Right. So, what could have the bank done better in this scenario? Because you said there was no clarity on the conference call. So, maybe
Yeah.
a little bit more clarity.
No, he was not referring only to this conference call.
Right.
He's saying that expectation has been building up for a while.
Okay.
You should have been on the ball, and you should have very clearly told the investors that, look, the scenario has changed.
Yeah.
So the
Yeah.
scenario when the merger happened was completely different, where rate hikes were not anticipated to such a great extent. Now, when rates have changed, there is so much competition in terms of raising deposits. Everybody is hiking rates, right? So, for a bank like HDFC to manage and sustain the same kind of growth, it's going to be very difficult. See, they rely a lot on unsecured loans. Unsecured loans form a very important, it's very attractive.
Yeah.
Now, there are issues there. There are limits to it. Now, therefore, you should have very clearly told them that focus on the return on equity. Don't focus on the margins. Now, that communication has not happened very clearly. It
I
was very
see.
vague.
I see. So currently, the market or the investors are grappling with a little bit of uncertainty
Yeah.
into what the future is going to look like. However, having said that, you mentioned earlier on the fundamentals of the bank are very strong, that the business growth is looking fairly strong. Maybe a little bit better messaging
Correct.
would have helped the bank.
Absolutely. So better messaging is one thing, and from an investor's point of view, I don't think investors, I'm talking about investors, are not talking about FIIs, because the way FIIs and institutions invest are different from a retail investor invests. A retail investor invests for a long-term portfolio, and HDFC Bank, we all know. So as it's not just for HDFC Bank. If you look at any blue chip stock today, 2024 is going to be a year of correction very clearly, and retail investors should not look at 2023. Investing in 2023 would have made you poorer today.
Right.
So if you think that you have lost an opportunity, the fear of losing out in 2023, don't have to worry. 2024 is going to offer lots of opportunities when it comes to blue chips. Every dip should be bought. If you are an investor, let me reiterate, not a trader. If you are an investor and a long-term investor, simply go and buy blue chips when they dip and accumulate over a period of time. In the long term, you will make a lot of money.
That's where we are. So that's what you have it for HDFC Bank. The 2 days of a difficult trade that's been happening with the bank. Our managing editor is pointing out that better messaging could have probably helped the bank, but also for investors, this is an opportunity to buy on dips.